What is up, team? We have a huge week ahead and we're going to be covering two trades in this video. One of them is a Bitcoin swing trade that we've been talking about. The other is a QBTS options trade that this week has just primed for us. As well as thank you to you all who've subscribed. We have 25 subs, which means we are doing a 1 ounce silver coin giveaway, which we will talk about the rules at the end of this video. So stick around for that if you're interested in attempting to win a 1 ounce coin here. So first thing we need to do, get a lay of the land. If you've been watching my last videos, this is familiar to you. 2 weeks ago, we had a giant candle in the stock market, both in the SPX and the NASDAQ. Since then, last week, we've chopped sideways, but we didn't break above or below that candle. I believe with the news announcements this week that we will break above or below that candle. We just don't know the direction yet. What are those news announcements? NVIDIA, Wednesday night. NVIDIA is the AI powerhouse of the entire stock market. They're the biggest company in the stock market. If they have good earnings, that could pump the market and see a pretty big rally here and us break above this candle. However, if they miss on earnings, we could see the market pump down. In addition to that, the following morning, Thursday morning, we have the NFP payroll report, the non-farms payroll report. Essentially, that is letting us know how many jobs were created monthly, but because the government's been shut down for October and November, we've been flying blind. We haven't had that data, and so they're going to be announcing September's numbers this Thursday. So within that 24-hour span, Wednesday night to Thursday morning, we get these two huge news announcements. The second news announcement is going to drastically affect whether or not the Fed cuts rates on December 10th, which would be bearish or bullish for the markets depending on what that result is. So long story short, two big news announcements. Both of them could tilt the market one way or the other. So how are we going to prepare for that? With two big trades. The trade I love the most that is shaping up is seen on the Bitcoin daily chart. So that's what we have pulled up right here. So I'm going to teach you, this is a pretty intermediate trade. I'm going to walk through it again. I'm going to go through all my indicators. I'm going to slow down. I want to make sure that everyone is crystal clear on this trade. There's a theory. It is called Elliott Wave theory. Elliott Wave theory is basically the idea that markets that markets move in repeating cycles, like psychology cycles. So price doesn't just go straight up. Price doesn't go straight down. It moves in waves. People get excited, people take profits, people panic, people sell. The long story short is it moves in 3-wave patterns. So the 3 waves I'm looking at here are distinctly 1, 2, and the 3rd wave is forming. So this is what we're looking at. This is a very strong Elliott wave. We can actually mark this out. If you go over to your indicators and you go to Elliott impulse wave right here, the 1, 2, 3, 4, 5, you can click on that and you'll go from top to bottom of the candle wicks. And there's a couple things here that we use to confirm the trade. One of them is that they are true waves, that 2 isn't higher than 1, or that the bottom of the second wave isn't way up here, that they are sort of descending or ascending waves. Almost looks like a bit of a staircase. The second thing is typically we have the 4 and the 1 almost horizontal to each other. Because we have this one wick of the candle that was quite low right here, if we actually bring this up to where the bottom of both those candles were, where it closed, the 4 and the 1 are actually quite close. So that's what kind of solidifies that this is a true Elliott wave to me. The second indicator that we're going to look at. So for this wave to shape up, what we're looking for is the wave to continue up here and then potentially have a bit of a pullback. That pullback is our entry point. And what I mean by that is we're going to go to a tool called the Fibonacci retracement tool. You can bookmark it. I have it right here. It should be in your indicators. So what is the Fib retracement tool? Well, the Fib retracement tool helps us measure how deep a pullback during a correction is. Essentially, a bunch of mathematicians looked at the stock market for the last 50 years. They've looked at these golden ratios, and this 0.618 is the golden ratio, and you'll see what that is right now. So you mark the top or bottom and the top of your wave. We zoom in. I'll drag this over. You got the 0.618. That is our entry point. If this wave comes down and dips into there, that is our buy point. My fib tool is going to look a lot different than yours. I'll quickly let you look at my settings here. I have my golden ratio set to gold. That's the 0.618. Everything else I've just turned to charcoal and put it kind of like half transparency here. So you can take one more screenshot. I have 4 selected there, 3 selected there, 0.618 in gold. So what we're looking for is however high or low this next wave is, we're going to mark the top and we're going to mark the bottom of it with this tool. And if it dips back into the yellow, we are going to buy. This setup's worked for me a ton in the past. It's not a guaranteed thing. The macro market is always going to carry more momentum than a single stock or like Bitcoin itself. So if we're trading this and expecting Bitcoin to go up, but Nvidia's earnings come out and Nvidia just tanks, it could drag the whole stock market with it. So this does not trump the entire stock market, but if we can see relatively modest earnings with Nvidia and nothing that's too scary in that jobs report, this could be a super strong trade. So there is still risk. I want to just make that very clear. There is still risk that the whole market could take this Bitcoin even further down. But what we're looking at here, we're going to mark out our next indicator, which is called the trend-based fib extension. The same thing. We start at the bottom of the 5th point here. We go to the top of the wave, and then we bring it back down to the bottom where that 5 is. Again, I'm going to go through my settings here. Everything's basically charcoal and grayed out except for the 1.618 and the 2.618. The 1.618 is our golden target, okay? The most common wave 3 exhaustion point, and then the 2.618 is more aggressive if the stock or the index is pumping hard. So what we're looking for here is that these would be our take profit zones, and we would set a stop loss just below the wick of that red candle, the very bottom of that last wave. So we would see this come down. If it does, we buy here. We're going to set a stop loss down here, and then we're going to have the stock start trading up, and our exit point would be the 1.618. We could exit maybe 75% of our position. This could pump up more, and we'd exit the rest of our position right there. If the market did continue down, we've set a stop loss right here to stop us out short. Why is this a good trade? Because you can go to your long position. I know there's a lot going on the screen right now. We're going to zoom in on this. This is just a way so you can map out your profit. So right now, in this trade, if this was the wave height, hypothetically, our stop loss would be here. So we would have the potential to lose 5%. But even at the 1.68, we'd have the potential to gain about 13%. So almost 3x our losses. Which means if you were to run this trade 3 times, you theoretically should break even. And we have some of our exit points here, or take profit zones up here at the 23% if we were being aggressive. So that's why it's a good trade. There's a lot more to gain than to lose. So if we were to go back here and just look at Bitcoin, let's see if there was any recent Elliott waves. Like right here could actually be one. This was April. So this is why this setup's rare. It's not like the setup is happening all the time. This setup happened here in October. This setup happened pretty much back here in April. So this might be like a 2 times a year setup, which is why it's so exciting. So we mark out our 5 waves. Okay, so there we go. It's kind of the ascending staircase. Just like we said here, comes up, the wave, there's a top of a wave and it retraces. So if we use our fib tool here now, I'm curious. I know there's just a bunch of shit on the screen. Fib retracement, we'll start at the top. We'll come down to here, because now we're going the opposite direction. So the wave came up, it dipped back down into the buy zone, this would have been where we bought, and we're expecting it to go the opposite direction here. So down, you could have bought this against Bitcoin. And let's use our trend-based fib. Let's go to the top of this wave, to right where it came to the highest, right here, and back down. Okay, yeah, look at this. This is actually insane. So, I know there's so much on the screen right now. Let's turn off this indicator. So we came up, we had this reversal wave right down into the buy point, and then it changed direction and sold off right at that golden ratio. This is a perfect example of this trade actually coming into fruition right here if you caught this going the other direction. Now this didn't make it as far as going to actually it almost did. Like if you had your stop loss set down here, just below the wick of your 0.5, the candle, you could have actually rode this up and it might have cashed you out right here. You could have caught the entire trade and then it changed direction again. But it definitely had these 5 strong waves or 3 strong waves, 1, 2, 3, reversal, and then started coming the other direction. And so that is the swing that we're taking right here, just in the opposite direction. That is what we're trying to do on this trade. So I know that was a little confusing, but at the same time, it is a very complex trade. Long story short, the waves have formed where you should see this wave come to completion up here, dip down. If it hits a buy zone, we're in and we're going to take profit at the 1.618. If you're at all confused, I will be covering this every single night, so I'll let you know exactly when the time to buy is. The only thing is I can't do it real time during the day, and you might not see the video if I did do it real time during the day, so I'll try to stay as on top of this as possible for all of us so you can kind of follow along that trade. The second trade is a options trade. It is an options trade that is called a Strangle. So what this trade is and why it's powerful is that we don't need to know what direction the market's going to go, because we have these 2 big news announcements, both NVIDIA and the NFP report. Who knows what's going to happen? But we expect that there will be volatility. What we expect is the market's going to do something in one way or the other. We just don't know what that reaction is going to be. So what a Strangle trade is you're effectively playing both sides of the market. It doesn't matter what way the market goes. You win either way as long as it moves enough. And so this is how this trade works. You're going to buy a call option and a put option. So that is an option that's saying, I think the market's going to go up, and you're going to buy an option that says, I think the market's going to go down. The science behind this is, so I mapped out, the blue line is basically the strike price of the call option, and the put price, the strike price of the put option. So we're going to have a $27 strike price on the call. We're going to have a $20 strike price on the put. This is what it looks like on paper. We're currently at $23.61. We're going to go roughly about 15% out of the money. So you're going to buy a $27 strike, which costs you 84 cents per stock, but you have to buy them in packs of 100 stocks when you're trading options. So it's $84 to buy the call option. It's $58 to buy the put option. In total, this trade costs you $142 if you buy it at market open tomorrow. So here's how this trade works. Because we bought the option 15% out of the money, if in the next 2 weeks, the expiration date is November 28th expiration. So that gives us 2 weeks to trade. But because Thanksgiving is on Thursday, 2 weeks from now, there's only 9 trading days. So we have 9 trading days for this stock to either go up or down 15%. So if it doesn't, if we stay in this range between these 2 blue lines, that's the 15% marker up and a strike price down, we lose all our money. $148, is it? $142 is gone if we do not go above that blue line or below this blue line. If we do go above it, we start paying off our $142, and if we get above this yellow line or below this yellow line, we're now in full profit. Why do I think that this stock is going to be volatile enough to move above or below that yellow line? We could do this exact same setup on NVIDIA. because we don't know if NVIDIA is going to pump after earnings or dump after earnings. But NVIDIA premiums are so expensive because around earnings, they always are expensive like that. So we're going to trade qubits, D-Wave Quantum. This is a highly speculative tech stock that is very sensitive to the moves of the market. And it's cheap to buy these premiums because everyone's looking at NVIDIA right now, not D-Wave. So what we can do is we know that if the market pumps or dumps, Q-Wave will or qubits will likely pump or dump. We have 9 days for it to break these yellow line thresholds. If we go back and just look at it without the big news announcements, count these candles. These are all daily candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. So in the last 9 days, it was down 33%. And the 9 days before that, 1, 2, 3, 4, 5, 6, 7, 8, 9, it pumped. It peaked at 43%. So it moved 33%, 43%, and the 9 days before that, it's moved 1, 2, 3, 4, 5, 6, 7, 8, 9. So it went both up. Oops. Went both up. What the? Went up 43%. It went down 43%. Both in that 9 days. So long story short is that this is a highly sensitive stock without big news announcements. So all we need to go in the next 9 days is up or down 15% in either direction, and we make money. And with the 2 big news announcements, I believe that will happen. So what you do is you buy a call option with a strike price of $27, and you buy a put option with a strike price of $20. One of these will be worthless at the end of the options contract. The other one should make you enough money to pay back the $84 and then some. How the payment works is you are trading as if you had 100 stocks of qubits. So for every dollar above this yellow line, you make $100 in profit. So you break even at the yellow line, you lose nothing. Every dollar it pumps up, you make $100. So say, for example, it did pump up, let's go 35%. 35% is right there. So our break even is $28, 28, like 68-ish. And if we got to 32.10, that means we would make almost $350 profit. And it costs us $142 to start that trade, so that's basically 200% profit. Right? Did I do that right? Yeah, 300. Yes, exactly. Because so this would be a 200% profit trade right here if it only moved 35%. We've seen this thing move 43, 45% in all these given weeks. So who knows? We could be even higher or lower than that. Again, this is probably the best trade of the week that I've seen is a strangle. So it doesn't matter what way the market goes. All we're saying is the market's going to go one way or the other quite drastically, and that qubits is going to follow that trend and go one way or the other quite drastically. So those are the 2 trades. Bitcoin swing trade. I will keep you completely posted every single night. Subscribe, make sure you're following on whether or not we're entering, what that trade looks like, because I know there's a lot of technicals, there's a lot of stuff going on in that chart right now, as well as the qubits trade. So this one, starting market open tomorrow, I'm going to open up this trade. We're doing a public portfolio here. Where is it? We're doing a public portfolio where we have Duolingo and Celsius options right now. We're just trading 10K publicly. We started this about 2 weeks ago. I think Duolingo is a really great stock to buy. I have a video on it. Check it out. I posted it last week. We'll likely sell a tiny bit of this position so that in the public portfolio we can open up that option strangle so I can show you exactly what that looks like. And then if that Bitcoin trade swing does come into formation, we'd have to liquidate a little bit more of our Duolingo position, which is basically even at this point anyways, so we wouldn't be gaining or losing. We'd just be making some more liquidity for us to enter that Bitcoin trade as well. So in the public portfolio, you can watch me trade all of this, as well as I'll be trading some of these in my private portfolio. So that's it for today. Bitcoin swing trade, qubits strangle trade, and then let's talk about the silver. So I made a commitment to the channel and the community. I appreciate every single one of you who has subscribed and who's following and who's watching these videos. The whole purpose of this channel is that Together, I can show you what I know. I've been trading for 13 years. I've been trading daily for the last 6 years. I do some swing trading and I do a lot of long-term investing. And over the course of these videos, I'm going to show you exactly how I lay out my long-term investing portfolio and how I swing trade and take those profits and inject those into long-term assets. So that's what basically the premise of the channel is. All the tools will be free. All my knowledge is free. All I'm really asking for is to sub and for us to build a community and us to have fun doing this. And eventually we'll get a Discord started where we can start sharing trade ideas and we'll just kind of roll from there. But I made a commitment that I would give 1 ounce of silver. This ounce of silver, it's a Canadian maple, 99.99% silver, away once we had 25 subs, and we surpassed that. We have 27 subs. So how the giveaway is going to work is I'm going to try to post nightly this week. So tonight, Monday, Tuesday, Wednesday, Thursday. So those are the 5 days right there. Let's go Friday as well. We'll have 6 days. So every business day this week, including this video tonight. If you're a subscriber, I want you to comment something. Any comment gives you a entry into the draw, but you can only have 1 comment per video. So you can have maximum 6 comments. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. You'd have 6 entries into the draw. On Saturday, I'll pump anyone who commented on these videos, who's a subscriber, into a wheel. We'll spin that wheel live on my video, and then someone will win the silver. So we'll do that draw Saturday. So shoot me a sub, like the video, comment on it. If you have nothing to say, just say silver or something. And we'll get the silver rolling. But let's really focus on these trades this week and see if we can get into some profits here. I guess disclaimer is that I'm not a financial advisor. This is not financial advice. This is for entertainment purposes only. So trade and incur risk at your own level. But I'll keep you posted on exactly how I'm trading this market for the next week here, which should be pretty fun. All right, we'll talk soon.